good to the market, good to the lot of corporates. That's point number one. Now, point number two is why we never had a lower interest rate regime. Again, I go back and look at it and say that probably we had a higher inflationary pressures continuing to happen. With commodities being where they are, and I think for the next 12 months, the inflationary pressures will be subdued, and that could result in rate coming down, and there will be a lower interest, lower pressure, rather the pressure on interest rates will be much low, it will be higher, that the rates will go down. So I think that's extremely positive both for the corporates as well as for the markets. So I'm in that camp.
All right, taking a middle path there, so to speak. But there's also a divergence of views, not just on India, but also on the monetary policy action likely to be taken by the Fed. On one hand, you have a strong U.S. macro data. On the other, you have comments from William Dudley as well as Stanley Fischer. But it's not just the U.S., Shri. We have the Bank of Japan that's undertaking a record buying of government bonds. You have the Swedish central bank, which is saying it's going to take steps as far as inflation goes. We are looking at the Bank of England. There's, of course, the Fed. Do you think there's enough space for so much of monetary policy action really on the part of central banks, and how's that going to pan out?
I think this action of various central banks didn't start today. It started long back, and these banks are continuing with that particular process which they started long back. Now, to go back and look into, say for example, everybody is looking towards Fed tightening. Let's even look at the kind of numbers in terms of job additions or payroll numbers, which is one of the criteria that everybody looks at in the US in terms of a stronger economic presence or stronger economic growth that's being seen. And those numbers, if you look at it, when the payroll additions were closer to 400,000, anything above 300,000, anything over 3 lakh, that has been steadily coming down. And the last number that I saw was somewhere around 214,000. And on the contrary, you are actually even seeing increased job losses from the energy sector. So it doesn't give you a picture wherein that economy is very, very strong, so that you're going to have probably a tightening which will happen. So I'm not an expert on U.S. economy at all. So I would think at this stage, with whatever I am seeing, that probably we may not see a rate hike immediately happening in the U.S. In the near term. That's number one. Number two, now you're speaking about various other central banks having or following policies of a loose monetary policy. I think that's given that every economy wants to, or every central bank or every country wants to see their economies grow, and then as a result of it, these economies are going to follow a loose monetary policy, and that's what we are seeing today.
All right, Shri, thank you so much for joining us, and sorry for interrupting.